Okay, so I hope that those who wanted to join the class, they are already in. So shall we start?
Yes, ma'am.
Okay. And I'll not be turning off the links, so don't worry about that. Because I've seen some people who are there in the class from the very beginning, and just because I turn off the link, they have to keep on asking me again and again just in order to join the class. I hope Smith is there today. Smith, are you there? Has he joined yet? But irrespective to anything, I'll not be turning off the link today at all. Because it's very disturbing for me also. Okay, so we were talking about the supply of money. Where were we yesterday? Where did we stop? Can anyone tell me that? And it is a very humble request if you could please tell me. Because I keep on asking my students that where we stopped, but I rarely get a reply. If you could reply.
I think you have explained this three.
Okay.
We are
So
done with the explanation of this three.
we were talking about the explanation of the measure of high power supply in India.
Yes.
Okay, so what I'll do is because I am very sure that I've already explained you the central bank and high power money supply, but I did explain you about the measure of high power money supply also. But at the same time, I do not expect you people to remember it because it was in the last part of the lecture, and I've already told you I have been a student, तो मुझे पता है कि लेक्चर के आखिरी पार्ट में जो कवर होता है उसको वो कितना आप याद रहता है. Okay, so we'll start with the measure of high power money. Now, what is this? How will we measure the high power money supply in India? This is the formula that is H is equal to C plus R plus OD is something which is used by RBI in order to measure the high power money supply. Now, this is something in which C is the currency held by the public, R is the cash reserve of the commercial bank because commercial banks have to keep some cash reserve, and OD stands for other deposits. Now, the problem with this measure is that if you are going towards the practicality of this measure, then other deposits is something which is holding less than 1% of the total demand, or we can say of the total of high power money supply with the public. So what we will do is just for the sake of practical purposes, we'll measure the high power. Just give me 2 seconds. I'll be talking a bit slowly today because I'm not feeling well. You know what happens with the high power money is that for the practical purpose, what we do is we remove these other deposits. That is, as you have seen the part of OD, we remove that part of OD from the total calculation because it is less than 1%. So now the calculation that comes into existence is H is equal to C plus R, where C stands for the cash that is held by people and R stands for the cash reserves in the commercial banks. Yes, Sharan? Sharan, beta, you have raised your hand. Do you want to say something? Sharan?
No, ma'am, sorry, by mistake.
It's okay.
Okay, Saran, okay.
Okay, so the cash reserve from the commercial bank forms the basis of money supplied by the bank. The credit money that is supplied by the bank increases the money supply because with the help of this credit money, we are able to increase the in supply of money in circulation. In addition to the high power money that is already available. We are already aware that what is high power money, right? We've already been through it yesterday that it is the money which is used by the bank and with the help of minimum reserve system, we are able to give out as much money as possible only by keeping a minimum reserve of the gold of 115 crores. इंडिया की पॉपुलेशन में पूरी पॉपुलेशन में बांटे तो हर एक जने को 1 करोड़ का गोल्ड भी नहीं मिलेगा वो भी बहुत कम पड़ जाएगा So it is very important for us to understand that what sort of money is created by the commercial bank because this money is playing a very important role in the total money circulation. So now what is this money creation by commercial banks? So what happens with the commercial banks is that they are the second most important source of money supply. And the money that these commercial banks generally supply in the economy is something which is termed as credit money. So what is credit money? If the term credit money is given to someone who haven't been through the theory of macroeconomics, what a layman will think of this term, credit money. Anyone, in simple language, what is credit money? I do not need the definition.
A money
You haven't?
given as a loan.
Yes, okay. If a person is not aware of macroeconomics, then what will he think that what is credit money? We said that a person might think that it is a loan. Anyone else with any other answer? Any sort of response is welcome. Anyone other than Dhruvi, anyone would like to put up the point? Okay, someone is there. Is stating that money which we can use now but have to pay later. Okay, yes. Thank you, Nihar. I was actually looking for something like this only. So when a general person is talking about money or credit money, they'll think that it is something which we are taking in advance. But actually, the credit money that banks create is an outcome of their monetary transaction. That is, whenever we are dealing with the bank, if you're having a savings account, you'll deposit money. And if you need a loan, you'll borrow money. So This credit money is something which is created out of this borrowing and lending of money. And in the process of their financial transaction, what banks do is they receive the deposits from the public, and the money which is deposited by the public is given to someone else as a loan. Now, the money which is deposited by the public in the banks is called primary deposit. Right? As you can see on your screen, that the money which is deposited with the bank is called primary deposit. Now, this primary deposit is made by the people because of three exogenous variables. Exogenous variables are external variables, which are not in the control of a particular individual or the economy. Now, what these variables are or these factors are, the first one is household saving deposits with bank. Person has saved some money from the regular household, and then yes, and they want a saving. Yes, meet. Beta, your mic is on. So it can arise due to the household saving deposits with the bank, the payment received from central bank for sale of from the sale of government bonds, or the payment received from abroad and deposited in the bank, or the money deposited for the convenience and transactions. These are certain exogenous variables due to which a person deposits money with the bank. They said three, यहाँ पे अपने को four दिख रहा है, but even when some money is received from outside and you're depositing into the bank, that is just because you do not need that money at that point of time. So we can easily consider it as the savings deposits with the bank because we do not need the money at that point of time. On the basis of primary deposits, bank creates secondary deposits, or something that can also be called as derivative deposits. Secondary deposits are something which are arising out of the loans which are returned to the bank in the form of deposit. Yeah, the bank has given loan to people, and generally a common man returns loans. So secondary deposit arises out of bank loans which are returned. It is the volume of secondary deposit which constitutes the money supply by the bank. That how will we decide how much credit money is supplied by the bank? The easy way of calculating that is understanding that what is the total amount of loan which is given by the bank. Now, the process of a deposit creation or credit creation is something which begins with, with the banks lending out the money for what? It begins with the banks lending out the money. Just a minute. There is something which is mistakenly written in your slide. Begins with banks lending money out of the primary deposits. That is, you have kept certain money in the bank account in the form of savings. Now, what will the bank do? They will lend this money to someone else. आपसे बिना पूछे वो भी पूछेंगे भी नहीं आपसे आके. Will they come and ask you? No. Obviously, we'll say but then for the betterment of economy, this is compulsory. So the process of this deposit creation or credit creation starts when the banks give out loan from the primary deposits. No doubt the banks cannot loan the entire money out. Whatever we have saved in the bank account, bank is not capable enough is not allowed to loan out the entire primary deposit. What they have to do is it is mandatory for them to maintain the certain proportion of primary deposit as a cash reserve. Now, when we are talking about this cash reserve, there are basically two types of cash reserve that a bank has to keep. One is the statutory cash reserve, and the next one is called the bank's excessive reserve. So the statutory cash reserve is SCR. This is something which is imposed by the central bank, and it is a mandatory cash reserve. Whereas ER is in addition to statutory cash reserve, and this is kept in order to meet the cash demand of the depositor. Like there can be a day-to-day cash demand of the depositor. In order to meet that sort of cash demand, we keep excessive reserve, or not we keep, the banks keep excessive reserve. See, some of the time what happens with the banks is that they are having bigger accounts and they are having smaller accounts. Um, and due to any possible reason, to a precaution, due to a contingency situation, it can so happen with an individual is that they have to withdraw some amount, bigger chunk of money on a particular day, which they have deposited in the bank through a long period of time. Now, can the bank say no? कि नहीं मेरे पास इतना पैसा नहीं है, I'm not going to give you. Can the bank do that? A person has deposited a sum total of 50 lakh rupees in the bank, and on one fine day he goes to the bank out of some emergency situation and tries to, with the help of his PAN card and all the documents, tries to withdraw a sum total of 10 lakh from his bank account. Can the bank say no? So what will the bank do? What will the bank do? To decide and write down?
It will borrow the money from another bank.
No. That is also something which it cannot do. What will the bank do? Person has asked for his own money that he has deposited. Exactly. That money is something which will be given out of the excessive reserve that the bank has kept, and it is for this situation only. Excuse me. I'm sorry. I'm so sorry. What this? Okay. So what will the bank say to this person? No, but a secondary deposit is something which is created out of primary deposits. That is, when the bank or secondary deposit or derivative deposit, whatever you want to say, this is something which is created out of primary deposits. Now, what are these deposits? What does the bank do? The bank gives out loan from the primary deposits. Now, when that loan is Now, when that loan is returned to the bank, that sort of deposit is termed as secondary deposit. When the loan is returned to the bank in the form of deposit, that is termed as secondary deposit. Are we clear now, Vatsal? Because I was expecting someone to put this question, because this is something which is a bit confusing in nature, because in the entire explanation I'm explaining you that what is primary deposit, how is secondary deposit used, but there is no point of time when we are turning up to a point where I was explaining you what secondary deposits are. So secondary deposits are basically the loans which are returned to the bank. Okay. So what we do is that when a person is asking for money, we are paying it out of excessive reserve, and that is the purpose because of which we keep excessive reserve. Now, after maintaining the required cash reserve, the banks can loan out the balance money from the primary deposits, because this is something which is mandatory for the banks to keep. Other money can be lended out, and it is this lending out of money which starts the process of credit creation, or we can say deposit creation. Now, the amount of total derivative deposits which is created by the banks is something which depends on certain points. And those points are, the first one is the amount of primary deposits that a bank has. The bigger the bank, the more secondary deposit it will have. So, which is the largest bank in India? Which is the largest bank in India? Central Bank? Arey, no, not RBI, Srinam. I'm not talking about RBI. RBI has all the money in the world. Consumer Bank, which is the largest consumer bank, SBI. So now, if I tell you that ICICI or HDFC, commercial bank, beta. Now, if I tell you that ICICI or HDFC or IDBI can loan more money out as compared to SBI, will you trust me? That the secondary deposit of ICICI or HDFC is more than SBI. Will you trust me? Is this statement true? Why? The saying false. Now tell me why. नहीं Vatsal. Just because I am saying so, to such hi hoga was not the fact. The people, those who have said no, is right. Sometimes I even ask trick questions, so don't trust me. Okay, there were people like Jeet, Darshan, Rahil. They said no. They are absolutely right. That yes, if I say that ICICI or HDFC, exactly, Darshan, you are absolutely right. Because the deposits that SBI is having are way more as compared to the ones that ICICI or HDFC or any other private bank is having. So when we are talking about credit creation, then SBI can have a larger secondary deposit as compared to any other bank. Why? Because their primary deposit is also huge. अब ठीक है KU? Now you don't have to trust me. Now you're having a reason behind the answer. Is it okay now? Okay. So the first thing is that the amount of primary deposits is something which is responsible for creating the total derivative deposits. The second reason is the rate of required reserves. If the rate of required reserves increases, then you can create lesser derivative deposits. If it goes down, then you can create higher. So it depends on that. Then is the demand of bank loans by the society. That how much loans are required by the society. That is also something on which this secondary deposit depends on. That how much loans are required by the society at large. There are certain points of time when people do not go for loan, like the time that we are living right now in. There must be many people who are planning to buy a new car or a new house or something like that, or to shift at a new place. People were thinking about these things. But all of a sudden, this second wave of corona struck, and all the plans that we were having are somehow going on a standstill. Why? Because there is, and as soon as the plans which people are having start moving on a standstill, the requirement of loan in the market reduces. So, any further credit creation or secondary deposit creation is also coming to a halt. The last reason on which this credit creation depends is the efficiency of the banking system. That how early is a bank able to provide the loans to people and how well can they collect it back. That is also something on which that is also something on which this secondary deposits depend on. Okay, so if you are trying to conclude this derivative deposits or secondary deposits or money, then we can easily conclude that the sum of high power money issued by the central bank and the derivative deposits which are created by the commercial bank in general give us the total money supply of any given country. If you want that what is the total money supply, the only two things that you require is the total high power money and the total of derivative deposits. Just give me a moment, I'll have a sip of water and come back. And once I'm back, we'll be moving ahead with the determinants of money supply. Okay. Manit, aren't you very late for the attendance?
Sorry, ma'am.
Aren't you too late for the attendance? Manit,
Ma'am, I
Keval.
can't hear you. Your voice is breaking.
Yes, yes, definitely. My voice is breaking. See, these are the reasons because of which I block the class. But today I have given my word that I'll not be blocking, so I won't go. Okay, so now what are the main determinants of the supply for of money? Okay, the first one is monetary base. Now, the magnitude of the monetary base is something which is a significant determinant of the size of money supply. Because money supply is something which varies directly in relation to the change in the monetary base. Now, what is this monetary base? If this is so much in direct relation with the monetary base, then it becomes very important for us to understand that what monetary base is. It is something which refers to the supply of funds which are available for use either as cash or reserve of the central bank. So these cash and reserve of the central bank are something which are playing a very important role and which are directly related with the money supply. Now these monetary bases they change due to the policy of government and is also influenced by the value of money. That is, it is a cost of money in front of the foreign currency that can also be termed as value of money. So this monetary base is something which is influenced by these two things. That is the policy of the government and also the value of money. The second thing which influences the supply of money is money multiplier. Are you aware of multipliers effect? Do you remember the multiplier effect? Do you people remember the multiplier effect? What is the multiplier effect? 1 divided by 1 minus 1 divided by 1 minus what? MPC, yes. Or 1 divided by MSP, right? Because the calculation of MPS was 1 minus MPC. चलो good, हमें कुछ तो याद है. Okay, now what is this money multiplier? This money multiplier is denoted with M and it has a positive influence upon the money supply. An increase in the size of money multiplier will increase the money supply and vice versa. Like something which is similar to the multiplier effect in consumption also. When the marginal propensity to consume increases, the multiplier effects also increases. That similar thing is here. When the multiplier increases, the money supply also increases, and vice versa. When the multiplier falls, the money supply also falls. Consumption को support करने के लिए कहीं से तो पैसे लाने पड़ेंगे ना. Money supply will increase. अरे वाह ये तो कनेक्ट हो गया. That is very good. चलो बढ़िया है. Okay, the next determinant is reserve ratio. Now, what is reserve ratio? Reserve ratio is something which is denoted with R, and This is also a very important determinant of money supply. Why is that so? Because the smaller cash reserve ratio enables greater expansion in the credit by the banks. And with the help of these reserves, the banks can increase the money supply and vice versa. The rate of SCR is very small, but with the help of that SCR, the banks are able to supply a huge money in the market. Is anyone aware what is the percentage of SCR? Because I am not aware. I'll have to search. Anyone is aware of what is SCR right now for the banks? We saying it's 3%. So it must be 3% because as I said, I am not aware, so I'll trust you. Okay, so with the help of this reserve ratio, we can determine the money supply because with this smaller cash reserve ratios, we can actually these enable the greater expansion in the credit by the increase in money and thus they increase the money supply. Now the now this reserve ratio is often broken down into two components. That is excessive reserve ratio and required reserve ratio. Now what is the excessive reserve ratio? This is the ratio of excessive reserve to the total deposits of the bank. We are aware that what is excessive reserve because an amount which is kept by the banks in order to deal with the money demand of the customer. That is excessive reserve. Now, what is the required reserve ratio? The required reserve ratio, which is the ratio which is of required reserves to the total deposits of the bank. They are also named as RR. This is RE ratio and RR ratio. This is something which you'll be able to understand in detail in any of the subjects of finance. And I'm not a person of finance, so not aware of them. This RR ratio is legally fixed by the central bank. Okay, we can understand that this is something which must be related to the SCR ratios only. These RR ratios are something which are legally fixed by the central bank, whereas the RE ratios depends on the market rate of interest. Obviously, the RE ratio, that is the excessive reserve ratio, depends on the market rate of interest because it is the market rate of interest which enhances the withdrawal of money from the bank or the deposit of money to the bank. So, in this way, we can say that the reserve ratios are something which are responsible for the in order to increase or decrease the money supply in the market. You can say CRR and SLR, but then I'll once again have to check that which one is CRR and which one is SLR, and then I can come back and tell you that this one is termed as CRR and this one is termed as SLR. Because as per the data which you people are providing me, if 3% is CRR, then that is RE, which is the excessive. But excessive reserve ratio is the ratio which is kept by the bank. So SCR is something. ऐसा क्यों करते हो मेरे साथ? Okay, now what I'll do is, we cannot approve that what Vatsal is saying is right or wrong, but yes, you give me today's time. In your today's lecture, in your tomorrow's lecture, I'll come up with the detail of all these things. That is CRR, SLR, SCR, if they are same or not. Okay? Because if you are getting some information in the lecture, it should be authentic. Randomly saying that someone is right or someone is wrong is will be wrong on my part also. No? So I'll just reconfirm it. I'm not saying that you people are right or wrong, but I'll just reconfirm it because there are certain ratios which are kept by bank. So yeah, are we talking about SLR or not? That I'll have to reconfirm. Okay, I agree. I agree. I agree about CRR and SLR. But when it comes to the supply of money, whether these two are utilized or not, that I'll have to check. Am I having the permission to check it by tomorrow, or you want an explanation right now itself? Because I'm accepting that I have no clue about these. Right now, I'm not having any clue about which one of them is used. If CRR is 3%, then that is definitely something which is related to SCR. But they are saying SCR, so that is something already different. Like here they have mentioned SCR, statutory cash reserve. So let me at least check. Okay, okay, thank you. And thanks for the discussion. At least I also got this inclination of checking something out. नहीं तो मैं पढ़ा के चली जाती हूँ मुझे कोई चेक करने की इच्छा ही नहीं होती. So tomorrow I'll come back with what is actually standing for RE and what is actually standing for RR, and whether your CLR and CRR and SLR are included in this money calculation or not. Till then, let's move towards the next point or the next determinant, that is confidence in bank money. Now, the general economic condition is something that affects the confidence of public in bank money and thereby influences the currency ratio and the reserve ratio. Like during recession, the confidence in bank is low, and as a result, this currency and reserve ratios rise. Conversely, during the time of prosperity, when these banks are doing wonders, the interest and the trust in these banks is very high. So the currency ratio and the reserve ratio tend to be low because when the confidence is high, the ratio is low. When the confidence is low, the ratios are high. The banks have to keep more reserve when the public is not having any sort of confidence in them, because you never know when they will make a line and stand outside the bank. ये कई बार हुआ हुआ है. लोग लाइन लगा के बैंक के सामने खड़े हो जाते हैं. Let we want our money back. We don't know about that, and hence they have to keep more reserves. Whereas in the time of prosperity, people are trusting the bank, so they're I'm not gonna stand stand outside the bank in queue, and the bank will not be not will not have to return any sort of money immediately. So the reserves can be kept as low. Okay, so we'll stop here and we'll further continue with other determinants in the next lecture. That is, we are having a lecture tomorrow. Are we having a lecture tomorrow? Let me check. Tomorrow is
No, ma'am, we don't have.
no problem. We'll have a word on Monday. But then it is a very humble request and a very small request from my side. Can any one of you drop me a message on Sunday to check about this CRR and SLR? Because I'm a forgetful person. I forget many things.
Okay, ma'am.
Okay, Shriram. Like Shriram will remind me. Shriram, remind me on Sunday to check whether the CRR and SLR are connected to the ER or SCR. Okay. So thank you for the day. Take care of yourself and stay safe.
Thank you, ma'am.
Thank you. Manan will be having first and second unit in midterm.